then technically, like biologically speaking, she hasn't only been here for 2 weeks because she was born over a month ago.
Yeah, no, she was born 2 months ago.
Mm-hmm.
2 months ago yesterday.
I was there.
But
I'm aware.
you were not there.
In
Only I was
spirit,
there.
I was there.
But
In spirit, I was there, and you texted me, so it felt like I was there.
this is true. This is true.
I
Okay,
misspoke. I
I'll send you
misspoke.
photos.
Yeah.
Um,
How's the home search going?
it's uh, it's interesting. I wanted to ask you a couple questions about it because we're looking for a place in Calgary. But we've been hearing a lot with like in the market about like rate drops and stuff like that, and we just want to know like when is the best time to buy because the market's so all over the place right now.
Yeah, I mean, especially Canada wide, the market has seen a big shift, but I think like especially in Calgary, I always think of us as being in a bit of a bubble, especially the last 2 years. We haven't been as affected by the macro as Ontario and Vancouver has been, but we've also underperformed the average for about a decade. So in terms of Calgary market specifically, I would say we are 50% higher in listings compared to last year. So there's a lot more opportunities for buyers. Prices are still higher than what we saw last year as well, but where things have shifted is the rates. And it's always funny to me because when rates were on the come up, everybody was panicking to buy. Now that the rates are coming down, there has been a bit of a shift. So if we're comparing this November to last November, we have 50% more actives, but only about 9% less sales. So things are still selling. I just feel like a lot of sellers are very ambitious about the price that they're going to get. And they might be looking at some spring numbers, but the market has definitely shifted. I think this is a good thing. I think we were becoming a little bit too overheated, and now we're giving ourselves some breathing room where first time home buyers like yourselves are able to actually sit down, make a decision. Today, for instance, I have 5 showings with first time home buyers. All the homes are under 600K, and majority of these homes have been listed for anywhere from 2 days to 3 weeks. If this were spring, I probably would have to get up and go right now to show all of these homes because they would sell in the first 24 to 48 hours, especially if they're priced somewhat reasonably. So, is there a good time to buy? Is it now a good time to buy realistically? I think if you're looking at buying, you should be looking at a 5 year minimum, but ideally a 10-year outlook on it because real estate is a long term decision. It's not something that should be purchased with 1 to 2 or 3 year time frames because prices do fluctuate.
So when it comes to interest rates, then how is that affecting demand? Like, are we going to have to put in multiple offers, or has it kind of allowed that to be less of an issue when it comes to buying a house?
I know I see so much content with mortgage brokers and realtors saying the market's going to come up, the market's going to rocket again because these rates are getting too low. That might be the case. I think we could see a few percent up and down here over the next few years, but realistically, why are the rates coming down? The rates are coming down because inflation's coming down, because GDP is coming down. Debt loads, household debt loads are going through the roof. Small business insolvency, so small businesses going bankrupt, is at 2020 highs, the Great Recession highs. So they're not coming down for good reasons. So it's my opinion that we might see a few percent increase in home prices with inflation, but I really don't expect us to, shoot off another 15 to 20% like we did in previous years.
So I know that interest rates have been coming down the last few months, and that they're projected to continue to go down. Do you think that it's worth waiting and holding off for a spring market for potential continued decrease in interest rates, or would you just buy sooner than later anyways?
I think there's definitely a backlog of buyers as well, especially in that like under 750 range for detached homes. So when you put you and your wife in that grouping of people waiting to purchase when interest rates come down maybe another percent or 0.75, there's probably thousands of yous in Calgary alone waiting for the exact same thing and the exact same product being that home. And even though new inventory is up 50% from last year, when we look at long-term projections and data, inventory is still low compared to our 10, 20 year
Mm.
averages. And then coupling that with rates coming down, I mean, we could see a bit of the inrush and surge, but it's really inventory dependent. And at the moment, I don't anticipate it because we have plenty of inventory. If we start to see inventory come back to maybe 1 month of supply or less, then definitely we could see those prices creep up. The other thing to consider in spring, you're going to have more inventory. You're going to have a lot more options, most likely, than what you have right now, historically. But you're also going to have a lot more competition. And that's
Mm.
typically when we see a lot more multiple offers hitting as well. So you have to balance it. Again, it's a long-term decision. Waiting till spring, you're definitely going to have more options. What I always recommend to first-time home buyers or any client at all, like this is such an important decision, a long-term decision. If the right home does not come up, just wait. Do not settle. Just wait. I'd rather shop with you for 3 to 4 years. When we find the right home, you don't have to move, and you're super happy. Then we buy a home. You guys settle down. It's not the right home. We're relisting your home within a year or two, and that has happened. People make panic decisions. So that's why it's important to prep every client, including yourself, and just knowing like, hey, like there's always another home. There's always
Mm.
another home around the corner.
Mm. Okay, that's fair. That's fair. Yeah, I think we're leaning towards buying sooner than later. I just wanted to know what you thought about the spring market. What communities do you like? Which ones do you recommend? And what does like the days on market look like uh, in like some of those more desirable communities that you'd recommend to a first-time home buyer?
Are we staying in the south like we are now, or are we going to the north?
I wouldn't be opposed to living in the north, but I would prefer to stay in the south where we're at.
For sure. Yeah. So if we're staying in the entire south, like let's call it southeast and southwest, in the southeast, highest I'm always gonna recommend these neighborhoods because I believe in getting clients into neighborhoods that have unique selling propositions. So Mahogany and Auburn Bay, we're gonna have lakes, right? So great for families, fantastic for families, and great for resale. Lots of amenities in the community, and then Cranston, right? So Cranston has the river, the ridge, beautiful neighborhood, some high-end homes in there as well. Auburn Bay, Mahogany, same thing, plus the lakes. When we're looking at price points, and it really just comes down to pre-approval. So if we're looking at the same laned home, the exact same home, um, so it's going to be like 2014 and newer in Mahogany, we're probably going to be high sixes, low sevens, depending on the upgrades, finished basement, and also garage. In Auburn Bay, we're probably going to be looking at maybe like a late 2000s, early 10s, and we're going to be in that high fives to low sixes. If it's very upgraded, well kept, you could easily get into the mid sixes. But in Cranston, especially if we're looking at some of the 2003 fours to 2010s on the north side there, the cranberries, we could probably get into like the mid fives to high fives easily. If we want something newer in the Cranfords on the south side, we could still get into a detached home, a laned home with a garage and finished basement, low sixes, even high fives, right? So you are saving by taking away that lake, but again, for resale, it's a lot easier to resell in a highly desirable community. And then if you guys wanted to shift your focus, maybe into Bridalwood and Evergreen in the southwest, we're looking at very similar prices there in the mid to high fives easily. And there's even some homes that sell in the low fives if we don't need a garage or a basement.
Okay,
I think that's
interesting.
one thing that I think there's a bit of a misconception with Calgary real estate because we went up so fast that we might not be affordable, but things really have leveled out in a good way for everyone because I feel like if we kept seeing that same trajectory, we might end up like a Toronto or Vancouver where, we see the big pullbacks as well. There's still a lot of affordable homes under 600,000 and they're very livable, moving ready homes for a young family, no problem.
Would that be more semi-detached, detached,
All
or laned
detached.
homes? Oh wow.
Yeah,
Okay.
they're all detached lane homes, and that's what I mean. Like for a detached house, when you're looking at larger metros like a Toronto or like a suburb like Hamilton or Vancouver, like we're not even within 500-600K, and you're still within 20 to 30 minutes of downtown if you're driving
Hmm.
with traffic. Maybe on a terrible winter day, you're 40 minutes, the C train lines in the Southwest as well. So again, I think we're a little spoiled here in terms of like how much we pay compared to the rest of Canada. And again, just going back to stats, between 2014 and 2021, our prices were down, 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 down. Almost every single listing presentation that we did, a home was purchased at between 600 and 800. People would be losing 25 to $80,000 if they would have purchased at the previous peak. So we've caught up and surpassed our last peak, but it took us almost a decade to do so. While the rest of Canada continued to grow, we were very stagnant for a long time.
I also heard that there's like some new rules when it comes to first-time home buyers that have come out. What are those, and how will they affect me and my wife when we're looking to buy?
So amortization, so the length of the mortgage went from previously it was you had to put 20% down to get like a 30-year amortization. Now they've changed it where you can put down 5% and still get that 30-year amortization. So you're stretching that mortgage length for another 5 years, bringing your monthly costs down. And then if you're purchasing new, you can also stretch that to a 30-year as well, which is super nice, especially again if you're trying to keep your costs down. So you're going to be able to afford a little bit more home. I do personally think that a lot of these rules were brought in to more unaffordable cities like a Vancouver and a Toronto. In Calgary, how much is that going to impact us? I don't think a whole lot. And what we try and do as a team is if you said that your pre-approval amount was 700,000, we don't really care what the pre-approval amount was. We care more where do you feel comfortable on a monthly payment. So the big thing is like at 700K, you're comfortable, you can afford it. Obviously, the bank said that you can afford it, but realistically, maybe you're more comfortable to purchase at 600,000 and keeping your payment a lot lower. Maybe you're going to have another kid, or maybe there might be a reason that you're gonna slow down income, or you just want a lower payment, which is totally fine. So for me, I just try and figure out where our clients are gonna be most comfortable and then show them like a range of homes. So if you said I'd like to keep it under 600, I'd say no problem. Let's start with that 550 to 6. Maybe just go to 610 just so you see the big gap there and the difference of what you get for those for that $60,000 difference.
Okay, going back to the 30-year amortization, do you see most first-time home buyers utilizing that, or do you think they're sticking with 20 to 25?
Well, these rules don't take effect until the middle of December.
Hmm.
So we're gonna find out. I again like there will be people that take advantage of it. For me, I don't think it's gonna play a huge role here in Alberta, but in other provinces, like where the rules were basically designed for, I think a lot of people will need to take advantage of that program.
Hmm. Yeah, that's fair because they're so much more expensive. Once me and my wife, have narrowed down a couple communities, maybe even looked at a few houses online that we are potentially interested in, and we have our down deposit saved, down payment saved. Um, what are the next steps for us? How do we go to the next step?
For us, like if you said that your timeline was a month or two from now or a year from now, the big thing is just narrowing it down. So at the top of the funnel, we kind of start with like, okay, well, we're looking for a home. Maybe it's a detached or a semi-detached property. Then we start narrowing it down to like the must-haves. So for you, I know you guys are considering potentially having another baby. So a 3-bedroom up home would be of the utmost importance to you. Also for resale, we always recommend 3 bedrooms up, especially on a 2-story home.
Hmm.
Then we start narrowing things down to, okay, like is a garage a must have or a nice to have, developed basement, the size of home. And that's where we start looking at the homes because 1,300 square feet to 1,500 square feet may sound like a lot, and it is, but layouts matter. Layouts matter, the height of the ceilings matter, the lighting matters. And you might see a home where 1,200 square feet might work because the layout's so good. My next steps are typically let's narrow it down to a few communities, a few different homes, and then we just go out and we see it. Then we start going over the liability. If we're going to be looking at maybe an older home in Cranston, maybe it's going to need a new roof, a new hot water tank, a new furnace, and those items alone can end up costing you anywhere from $15,000 to $20,000, depending on the size of roof and a few other variables there. So again, it's also budgeting in some liabilities, and maybe we cross off anything built before 2015 because we don't want to take those costs on in the next few years. So I think it's always, figuring out a nice comfort level of price. Sometimes a lot of our clients don't even get pre-approved until we start narrowing it down far enough. And then it goes into community, and then type of home, style of home, and then the liabilities with home ownership that you're willing to take on.
With that last thing that you mentioned, the liabilities, uh, what are you kind of referring to there? And like, what is the associated costs or estimate associated costs when it comes to liability of buying a little bit of an older home?
Yeah, so this is one that I feel like not enough buyers take into account. So I have a construction background. So when we're walking through a home, I like to point these things out, and we can even dive into some of the pricing. And obviously, we get professional quotes. So let's say we're looking at a 2003 laned home anywhere in the south. So if it has an original furnace, it's going to be mid efficient. I've seen them last 30 years plus, but that is something that we should be budgeting in, and maybe it's going to be like $6,000 to $7,000 to repair, or I should say replace a furnace. And then the hot water tank. In Calgary, we have notoriously hard water, so our furnaces typically don't last that long. Obviously, it could last 20 years. It could die after 8 years. We just had one that died after 6 years and had massive issues throughout. So again, that might be anywhere from 1,500, 1,600 all the way to $3,000 if it's high efficiency or mid efficiency. And then the roof. The roof is another one. So depending on like ice damming, which way it faces, past hail, like wear and tear, the brand of shingle, is it an interlock? Is it that could be anywhere again from, if you don't have a garage, 9 to 12, all the way up to 15, 16, $18,000 on the laned home. So it's budgeting all these things in and just seeing what lifespan they have. And you kind of start getting a better idea as to how much extra you should be saving, because think about it. So let's say you buy a $500,000 home with minimum down, which is $25,000. So you purchase the home, and within the next 4 to 5 years, you end up spending another $20,000. So you're almost putting a double down payment into this home, 10% down, right? So when we're looking at these homes and writing an offer on these homes, it's super important that the client has a good idea of what their potential liabilities could be and will be in the next 5 to 10 years. Because the worst thing is, like, your client writing on a home, they're excited, they put the deposit down, and then you go to have the home inspection, and then the home inspector tells them that, hey, like, you're probably looking at another 30K in the next 5 years, right? So the more that we can educate the clients and our agents to educate our clients, the better off everybody is in the transaction. We're not wasting the seller's time. Our clients know what they're getting into. Yeah, I think everybody's happy. It's a win-win.
Yeah, that's important. I feel like a lot of people don't talk about that enough, and that's kind of an overlooked part of what a realtor actually does, is going in and looking at all that and helping you, you know, dodge that liability a little bit where you
Yeah,
can.
and like think and like again, like you just put yourself in that position. So it took you a few years, several years, or longer to save a down payment, and then typically, like, our first time home buyers, they're putting in like 95% of their liquid cash into their down payment. So to say, hey, you're gonna have another unexpected cost, which will be your furnace. And like, again, look, you can move into 2015 tomorrow and have the furnace die. Like, it could happen. That's why it's so important for every homeowner to have an emergency fund, because you don't want to be taking out loans for things like this. And unfortunately, a lot of people can't afford to have those emergency funds. But at least if we're explaining like what that cost would look like, they can have some heads up, some warning, right? And unfortunately, like, I could give you 3, 4 examples off the top of my head where we've had a home inspection. The furnace is near the end of its life. We're not seeing signs of any damage or anything else happening, and then client moves in 1 or 2 months later, and they're getting a new furnace for or a hot water tank for X amount of dollars. So again, there's a liability and a cost to owning a home. There's maintenance that has to be calculated. I know some people say 1% a year or 0.5% a year. Realistically, if you have a $10,000 emergency fund for your home, that's going to cover you for a lot of things. maybe not the roof, but for a lot of items. And just keep in mind, if we're buying a home that's over 10, 15 years old, we're already starting to see things fail, and need replacing, like appliances, and the hot water tank and a few other items around the home.
Are those kind of the most common ones? Is the furnace and the hot water tank?
Yeah, I mean they're some of the most costly ones, right? So
Hmm.
like to give you an idea, like the amount of washers that we've seen leak, and not work properly, dishwashers and hot water tanks is countless. Like I would say on a quarter of the listings that we sell, a client has had an issue that we're addressing prior to listing, or you know, most of our home inspections have a leak. And that's another thing I warn my clients about. Like we're buying a home, whether it's 1 year old or 10 years old or 30 years old, like every home could have a leak, right? It's not a matter of upkeep sometimes. Sometimes it's, again, just lifespan of
Hmm.
whatever item that we're looking at. And I've almost never had a perfect home inspection. I've had, things with very few issues, but rarely do you see a home, even new, that'll come out clean. Like there's some newer homes and that I may advise clients to stay away from that might have 10 times more issues than a home built in the 90s even.
Hmm. So would you recommend a new home more often than say like a 2015 build or somewhere in there, or even older?
I
Or
think it
is
really
it
depends.
really case by case basis type thing?
It's case by case because it really depends on your lifestyle. So if you said, hey, my wife and I want brand new, we value brand new, and we want to be able to customize, for sure, let's go to a builder. Let's see what we're able to do and let's price that out. If you said, you know what, we want to be in an established community that already has the schools, we don't want to be around construction, and we're okay to make changes over the years. So, if we get something that has dark cabinets in the next 5 years, we're okay to paint those cabinets or replace them and replace the flooring and change things. New serves a purpose, and that purpose is customization. And like, why do people buy brand new cars, right? They like
Hmm.
new, they appreciate new, they want to be the first ones to own it. um, where it gets a little bit tougher is Calgary has seen a lot of newer builders come to Calgary that don't have that reputation, and some have gone under, some have gone back to the city that they are known for building, and the workmanship has been subpar. And a lot of times they're not bringing their trades; they're trying to find trades here that can build for them. So whenever someone is looking at new, I'll still show them what they can get for the same price used. And depending on which communities they're looking at, majority of the time, you are paying a premium for new.
Hmm. Okay, good to know.
Well, let me ask you a question.
Yeah,
Do you and your wife value new? Would you purchase a new home?
I think ideally we would, just because um, it's nice to not need extra money to, replace the floorings if the flooring is outdated in the home that we're looking at. Getting into something that's new and shiny and has, brand new fixtures, brand new flooring, brand new paint. Those are just things where we're less likely to have to go and repaint the home or do these cosmetic renovations that we would like. Um, so if there were two equivalent houses, um, that are similarly priced, we would probably lean towards going new.
What a Gen Z answer. That's such a Gen Z, and that makes sense. Look, and
Are you?
a lot of our a
Sorry.
lot of our a lot of our Gen Z buyers want new, and I totally get it. And like, I can, I'm an immigrant. I can say this. A lot of our immigrant clients also, because they may not know the construction or want to know the construction. They just don't want any headaches. And it's true. Like, you have a warranty. I think people misunderstand what the warranty is sometimes and what it actually covers. So there is some due diligence that needs to happen on that side. But it is nice moving in and not having to do anything, right? And that's why renovated homes in mature communities go for a big premium. And in this kind of market, especially in the last few years, a lot of buyers are cash poor. And what I mean by that is, I've toured homes with clients where I'm like, okay, so $7 a square foot here for vinyl installed. Carpet's going to be ballpark this, and these are some of the other things to consider. $2.2 a square foot for paint. Going over some of the budgets and costs, and they're like, listen, like after we move in, we're going to be tight. Like we're going to be month to month for the first few months, and like we don't want to do all that. And sometimes you don't want to do it, not just because of finances, but I mean like for you, like you have a newborn. Do you want to move into the home and then be ripping out carpet with the dust and everything kicking up while she's trying to sleep? Probably not.
Yeah.
Right. So there is a market. Obviously, there's always going to be a market for new homes. There's always going to be a market for renovated or flipped homes. And there's definitely a need for it. But I think it's just doing some due diligence and understanding what warranties really cover, and also the reputation of the builder. The most important thing. If it's too good to be true and there's a builder selling for 30, 40, 80, $100,000 less than a lot of the others in the neighborhood, there's a reason for it.